Greetings, Algo artisans. Let's go ahead and take a look at the markets this week. A lot going on. Jerome Powell testifies, CPI data, and we're going to jump right into the data right now. Quick reminder that nothing we say in any of our videos, work, or website is to be used or construed as investment advice. Please consult a licensed investment advisor before risking your money on the markets because you can lose your money. It's risky. Okay, so we're going to go over the calendar. Not much happening today. Markets are very slow. Tomorrow, Fed Chair Powell testifies. Same on Wednesday. This is going to happen at 10 AM EST, and I'm not sure how long it's going to go. Go until it's done, if you take my meaning. Also, we have Thursday USD CPI news comes out. So when CPI data comes out, that really can affect markets, especially if CPI is different than the estimate. And there are many ideas as to what this might look like. A lot of news channels are selling their opinions. I personally will just wait until the data comes out and trade afterwards. I do not try to predict such things. It does not usually end well in trading. Friday has the PPI, which is the CPI's cousin with relation to producers, producer price index. CPI is the consumer price index. And there's going to be a lot of other CPI data and other such coming out this week. So if you are going to trade, make sure you're watching this calendar and you understand whether or not you want to trade news, how you trade news, whatever is going on, know that the news is there. Let's go ahead and take a look at the charts. Okay, so again, I don't want to spend a lot of time talking about CPI data, what Chairman Powell is going to say. Just know that those items can really throw off the charts. You might think price is going to go one way and it goes another. That's what I need to know about these things, is when they're going to happen so I can avoid trading while they're going down. In the meantime, I'm going to take a look at the charts so I can develop a plan as to what I might do given certain circumstances. And here's Bitcoin. We have it consolidating all the way back to early March, as we have been watching this now for several months post the halving, right? The post-halving pullback. Now we did get some capitulation here this last few weeks. We are looking at a weekly chart. Each one of these candles is a week's worth of price action, technically 5 days. So we did see a bit of a breakdown, and that is understandable. If we look back to the beginning of the year and last year, we have a massive move up, and these things tend to need to take a break. So if I were to treat this whole move up as one massive impulse, I would start at the bottom here, go to the top. That's the impulse right there, that big line. I would impose a Fibonacci retracement tool on top of that, and the 618 is all the way down at 44,000. And if we were going by Fibonacci type rules, we'd be looking at the 618, the 786, and the 382. 618 tends to be the most likely move. However, in a very bullish scenario, the 382 tends to be the most likely move, and that 382 is at 55,000. Now, price has wicked all the way down to about 53,000, but essentially this is a 382 pullback. And whenever I'm in very bullish markets, I look for price to pull back to the 382 before I consider looking at entries. Now, it could pull back farther. It could go to that 618, that is 43,000, 44,000, and pullbacks are very healthy. We don't want to see the market just go up, because if that does happen, if you get nothing but FOMO and price going up, when it comes back down, and it virtually almost always does that, then that pullback is going to be pretty strong. So what we have seen is a double top on this weekly structure. I'll pull back to the 382, and the question is, where is it going to go next? I'm not going to worry too much about, is it going to go to 48, 44, 50? I'm not going to look at these high time frame moves, because with cryptocurrency, I tend to just hold it. However, I will take short-term trades, which means I will zoom in and see if we can take a look at some data close up to see if there's some smaller moves of which I can take advantage. So let's take a look at the daily chart. So we can see here that price has gone down and grabbed what appears to be some liquidity down in the low 50s, and price is just consolidating in this area. Now, there is some liquidity to grab down here in the 53,000 to 50,000 area, and this is just based on price action. This consolidation area where price has moved before, where it's gone back and forth before, that usually means there are people who have orders in that same area. In the meantime, I can also take a look at liquidity data to see where liquidity is. The reason we want that is because price tends to head towards liquidity. So let's go over to the Kingfisher.io. The referral link is in the description. So if you want to use this, please use that referral link. It is a wonderful program. Paying for this program can give you so much great data. It's real data. They pull it right off the exchanges, and it's awesome. So I went ahead, took this data, and transposed it over to my chart already. These yellow areas are where the liquidity is. Now, the thing to know about this is that generally price wants to go to these liquidity areas. These are where people's trades will liquidate on your exchanges. Now, in order to move towards these, price has to favor a movement in that direction. So if price action and algos are favoring a move down, then it's likely the price will go down to grab these liquidity areas. There's other liquidity to look at, like I discussed, basically areas where price has fluctuated and consolidated in the past, and that is a different look at liquidity. But this right here, this yellow marks off of the Kingfisher, are real data. So let's take a look at which direction price favors. For now, this is a definite downtrend, lower highs, lower lows. These areas here are not set in stone. You always want to check whenever you're going to trade what has happened to these liquidity areas. But right now, you do have some liquidity close by, and price does seem to be building a bit of a range, and that is between, say, about 58,500, and it seems that that range is going to build down to about 55,800. Now, this could extend down a little bit further. It's a little bit premature to try to say what this range exactly looks like, but this is what it seems to want to do. Now, it could continue to put lows in down at about 54.2, those kind of areas, and that would widen the range, and that all remains to be seen. But what does seem to be happening is that the volatility is decreasing on certain time frames, and price is going to consolidate. And that means that these liquidity areas that are very close to price are likely to see price head towards them. So we want to know which one of those might be first. Well, here we see things are rather bearish in the algos. I don't really betray all the secrets to my algos, but I can take a look at them before your eyes and tell you that things are generally bearish in the near term. Now, with cryptocurrency on the very high time frames, things tend to be bullish. However, right now it does appear that even on the high time frames, the bullishness is tempered by the need to be pulled back. Just like we talked about earlier, what goes up almost always comes down. Even if it's a temporary move down, we want to see that it is healthy for the market. What is happening right now is good long term. We want to see price go back a little bit on this massive move up so it can build a floor. This is good. I know it doesn't feel good when everything goes down 10, 20% or more, but overall, it's healthy for a market. If things are bearish, I would be looking at these lower targets. However, price could easily head up to grab some of this liquidity on the way down. It could go up here to grab that and then head down and grab these other nodes. However, we are also at an area where we have painted a double bottom. Price, according to this candle, it only has 11 minutes yet left in it, has painted a double bottom. And I would be pretty comfortable saying that it's done that because this is an 18-hour candle with such little time left in it. Double bottoms are pretty good for support. There's a decent chance that price will rally up off of this and grab some of this up here. However, the algos have not clued us into whether or not that's going to happen. And this double bottom technically is not finished yet. And even if it does finish, price still could head down. So we'll take a look at that bit by bit as the market gives us more data over the next few days. Let's move on to the SP500. Now, the SP500 has been on a tear, and we're looking at some interesting data coming out of the market with regard to how they're keeping it going up, despite the fact that there is some shakiness in the economy. Tends to be that volatility gets crushed anytime price wants to head back down. Volatility is when price wants to move a lot. When there's no volatility, you get consolidations. You get times when price really just kind of goes back and forth and doesn't move very much. And when you have volatility, price will move a bit more. It'll break out, it'll move in one single direction, and volatility is good. Traders make money from volatility. For example, this move over the last several days, this last week, that's good volatility. Now, it does seem that as price wants to pull back, magically, not so magically, we have data showing us that volatility gets crushed through market mechanisms that seem to be deliberate. So it does seem that despite the market possibly having some issues, the powers that be want the market to continue up. And this might very well be because we are in an election year and the incumbents want to have the market on their side. So where might price go next? Well, I've mapped this out prior. This is a high, very high time frame Fibonacci extension level, and that's 56.65. And then you have one even higher right below 6,000. So I'd say about 5,900, maybe 5,967 is where I marked out below this Fibonacci level due to some resistance in the past, due to some market structure. So even though the Fibonacci calls out for about 6,100, there is market structure in the way, and I'd have a higher target of about 5,960 or so. Now, looking at the algos, everything is simply bullish. I'm not seeing anything that makes me think there's going to be a pullback. Bullish, 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 and that is where it's at. Let's go ahead and move over to the Forex market, and I'll probably focus on the EURUSD. This is a decent indicator of just general strength here. More people trade this pair than other pairs. I had this long designed in case we saw a breakout. We've not yet seen that breakout, so I'm not in this trade, and I do have a take profit up at $1.8802, and this stop loss probably would be adjusted now that we have some new data since I've go ahead and added this possible trade idea on. I do think there is more room to go up. However, whenever it does pull back, it might happen pretty quickly. Something like one of these pullbacks where it's headed up, and then bam. That could happen. We're in a very interesting time in the market. And July and August in the Forex markets and markets in general are very slow. There's not a lot of liquidity out there. So for the big players, it's really easy to push price around. So for the moment, the algos are bullish across the board on the euro versus the dollar. And we'll take one more look at the USDJPY. That's what we have time for. So the USDJPY, it appears, is showing us a bit of a currency war. Covered this ad nauseum. You can go back to some of our videos to look at what that might be about. Again, I'm not talking to the Bank of Japan, so I don't know for sure what's going on. I'm only guessing based on the data that I have that this is a bit of a currency war. And a lot of large players are dumping Japanese yen on the market. Japanese decided to go ahead and change their stance on how they're going to handle their currency. They're willing to defend the yen when before they were basically in an infinite QE scenario with negative interest rates and infinite printing. And it does appear that they're interested in protecting their economy and protecting their currency. So when that happened, we had a massive breakout, and quite possibly it's because a lot of yen was dumped on the market, which is interesting because you would think people would hold on to the yen if it were going to increase in strength. However, things are not always so simple. Now, that being the case, what might we see happen here? I'm going to look at this as one big impulse from here to here. On a high time frame, that is how it would look. Even though there are pullbacks, we are looking at high time frame, and I'm going to impose a Fibonacci extension onto this. Now, if price were to continue up, and it may very well, my targets to the upside would be 163.90 something, maybe 94, and 166.60, maybe in the 166.50s. Those would be high time frame targets because it would take a long time to get there, and I have not yet seen a 382 pullback, which I believe would be healthy. Now, it may not happen, but price may make its way down to here, and this is, again, US dollars versus the Japanese yen. So if this heads down, that means the yen has gotten stronger or the dollar has gotten weaker or both. So it would not surprise me to see price make its way back down to this area, grab some liquidity, or even a little bit lower. However, due to this peak here, this high at 160.21 or so, price doesn't have to go any further. It's already touched that level. So that yellow line I just put right on the chart, you can see that price has touched that, and because it has done so, it does have a decent probability of simply going up from here. And algorithmically, it's actually pretty hard to say. This chart is definitely high time frame bullish, and it does appear that whatever pullback is happening may continue, may not. This remains to be seen. I do have some algo alerts that can tell me when this is turned around. I can simply watch the price action as well. But a decent trade here, provided that I am confident that price will go up from here, would be too long in this general area. Have a stop loss, perhaps below some structure. I would have to really do a little bit of math on the stop loss itself, and then have this nice long move up here to this 166.50 area. I mean, that is a beautiful trade. And again, I'm not in this trade. I do need to see some more data showing me that the Japanese yen is ready to start getting weak again, or the dollar strong, and price heading up. But that is a decent trade plan right there. I hope this video was helpful. Please come over to algofactory.tech. We teach people how to build their own trading method, otherwise known as an algorithm. You don't have to know how to code, but if you do code, we can put you on the path to where you can build something that trades for you while you're not at the computer. If you just want to trade manually, which is what most people are doing, then that is, of course, something that we can help you do and help you have the capability to possibly extract money out of these markets on a regular basis. And while we do focus on crypto for a lot of these videos, I'm actually primarily a Forex trader, and you got to know that crypto doesn't go forever. It goes for about a year and a half, and then for a couple of years, there's not much going on in crypto. And if you want to be a trader, you're going to want to understand how to really trade, how to put on those big boy pants, because what's going to happen is eventually crypto's going to flatten out, and the meme coins aren't going to be what they used to be, most likely. I've seen it enough times. I've been in this game since 2017. I don't expect that to change. So come on over, learn how to trade. As a matter of fact, we got some pretty happy customers who are already down the path of success in their algo building. Let's hear from one of those right now.
Hey, Cowboy V, I just wanted to give a heartfelt thanks for putting this project together. I initially joined Algo Factory a year ago, concerned about a repeat of the 2008 Great Financial Crisis and the prospect of losing my job again. Within 12 months, under V and Cowboy's expert tuition, including live reviews, I've created a profitable algorithm launched across a selection of assets. Now, facing the prospect of redundancy and a nice fat severance package to trade with, my current worst case scenario is to keep my job. Thanks again, guys. Really appreciate what you've done here.
Don't forget algofactory.tech, trade your job, upgrade your life, and we'll see you on the next one.